The S&P had quite a big slide on Friday night. Will it continue this week? Is this a sign of stagflation starting to develop in the States? University of Michigan Consumer Index took a tumble to 64.7, but more importantly, I guess you can see inflation for the year ahead is expected to move up to 4.3, whilst the S&P composite PMI actually sort of dropped all the way down to 50.4. RBA last week lowered rates in Australia. That's super good, and this sort of does signal the turnaround in terms of how the RBA is going to monitor the inflation and the economy. Let's have a deeper look, I guess, in terms of the US equity markets. For some time, we've always been saying that equity markets are overvalued. We've sort of talked about bubbles in a report, in past reports. We do remain short the S&P and have done for quite some time. The sell-off on Friday night sort of is one of those things where you start to look and you think, well, okay, my timing was wrong, but it's taken time for the market to adjust to where we think it should do. Now, the key will be, and we'll talk a little bit more about that in the trading side, but the key will be how the economy now reacts, because with sentiment starting to come off the boil quite dramatically, we'll get to a situation similar to what we had in May 22, where we saw confidence come off under quite a lot of pressure, and also the S&P. Now, it does make sense when you see these preemptive indicators such as the Purchasing Managers Index, the PMI, it could be for manufacturing, it could be for services. But when all these start to kind of unfold and the composite starts to look quite negative and heading down, you can sort of get a sense that the economy's in for a bit of a slowdown. Let's hope it's not stagflation, but given where we feel the market is and where the people feel inflation will go, the sentiment, people start to slow down on spending, and all of a sudden the economy starts to retract. Not to mention we've got all the other things out there, and also asset bubbles still at signs which are certainly high. So I guess when you look at it, S&P, the US equity markets remain under pressure. We did see Warren Buffett in the market too on Friday. He was selling some of his shares, and his company now has a record amount of cash. Now, what is he going to do with that? I think it's about $140 billion, plus $240 billion. But the key there is, what is he actually going to do with that money, and where is he going to spend? I think it's the case that it's just a bit too big for the market. Anyway, let's see what happens there. In this week's report, we compared the S&P Global US Composite PMI to the S&P, and you can really get a sense of why we feel the market's going to remain relatively weak for the time being. A little bit of a good correction is certainly on the way. So let's just stay close to that, and I think it will come lower. Remember, 6,000 is a very key level for the S&P. Okay, RBA finally moves on interest rates. We knew it was going to happen. They've certainly done that. They've now turned around and said, well, they're quite happy that the inflation's coming into tow. It's within the band that they want. They're going to monitor the situation, but I think because the RBA is quite a stickler, for just a wait and see, will protect the new regime is more of a wait and see, that I think this will be the last cut for some time. Not until we see our economy starting to slow down will they sort of reduce that monetary policy even more. So I think if anything here, we're here for quite a while, perhaps the next couple of quarters, so I can get used to where interest rates are for the time being.